Good morning and welcome to today's webinar. Before we get started, I want us to take note of a few housekeeping rules. We would like to mention that this webinar is being recorded and will be posted on our YouTube page. Kindly, all participants have been muted. During the question and answer session, you can raise your hands and you'll be unmuted to speak. You can as well drop all your comments in the question and answer box and on your screen. A survey link will be put in the chat box so that you provide us with your feedback getting to the end of the webinar. To make the session more interactive, we've created polls for your feedback on ESG issues. Without wasting much time, I would like to hand over to the Country Managing Partner, Mr. Daniel Lobusu, for a short message.
Okay, good morning, and I hope you can see me and hear me.
Yes, we can.
Okay, good morning, everyone, and a warm and hearty welcome to you all. Thank you for making the time to join this conversation today. As you know, you are Proving Sustainability and ESG Partner is back to share insight on the newly published IFRS S1 and S2 Sustainability Disclosure Standards. As we have done in the past with other frameworks and the standards such as the Bank of Ghana Sustainability Banking Principles, we intend to break the IFRS S1 and the S2 disclosure standards into digestible bits to enable you appreciate the standards, the history, the scope, and the expected potential impact that this will have on your business. Additionally, we also are looking forward to explore the role of accountants in the sustainability and the ESG journey of your business. And this is particularly important to me because I'm a member of the profession and I recognize the important role we play in ensuring that users of financial information, including sustainability-related information, are able to rely on our public financial statements. Accountants are now here to save the world with the issuance of S1 and S2 disclosure standards. So now, when you meet people, you only say S1 and S2, and we should know what you are talking about. I'm bringing back the 2 V's because we need to remember the undeniable fact that sustainability and ESG continue to gain momentum as an important consideration in determining business value and viability. We therefore need to continuously seek knowledge and keep up with new development. I want to encourage businesses to start laying the groundwork towards full implementation and compliance of these 2 new standards. Walk away from this webinar knowing that we continue to serve you as your trusted partner, deepening your knowledge in sustainability and ESG. Thank you once again for joining this webinar, and I look forward in catching up and engaging you as we journey to a compliance of IFRS S1 and S2. Thank you very much. I'll now hand over back to you to continue the program. Thank you very much.
Kwabena is an assurance partner and head of Deloitte Ghana's Sustainability ESG services. He is also the head of Deloitte Academy and a deputy leader for our financial services industry. He has more than 15 years post-qualification experience in all aspects of auditing, accountancy, and consultancy services. He has acquired immense experience in international financial reporting standards, implementation, and updates, an area he has and is still championing in West Africa. Kwabena has worked on various assignments for clients in the banking, insurance, and oil and gas sectors. He is also a key member of the Deloitte Africa Accounting and IFRS Specialist Group. Kwabena is a fellow of the Association of Chartered Certified Accountants UK and a member of the Institute of Chartered Accountants Ghana.
Good morning. Good morning. Thank you very much, Dan. And I think your introduction was very insightful with some key points that you mentioned. You said something that is very striking, that accountants are here to now save the world with the issuance of S1 and S2. And I think it's a very important statement, because with the issuance of S1 and S2, we have now shifted the focus from the financial items. In fact, we've not shifted, we are now blending the two. Financial aspect of the accounts and then the non-financial aspect of the account. So accountants are now blending the two together to help investors make an informed decision. And it's very important that we realize that the issuance of the S1 and the S2 is very investor focused. So, and I'm sure the other speakers will throw more light on certain areas of the standard. But just to give you a bit of an insight into the standard before we have other speakers to speak on other aspects, remember certain things are clear when it comes to S1 and S2. The standard throws more light when it comes to the objective of this standard. It is to provide or make clear or disclose in your annual financial statements what are the key sustainability risks and opportunities the company is faced with. And to also do this, that information that you are providing must be clearly or fairly represented. So you look at the standard and it brings out certain things that when you are presenting this information, it should represent. So that information must fairly be represented. It must be comparable. It must be verifiable. It must be timely and understandable. So when you are providing these information to the investors, you need to be aware that these are key elements that you need to consider in providing this information. Now, also you look at the standard S1 and S2, you realize that materiality, and I know that the other speakers will now dive into the issue of materiality, is very key. So that will be dealt with. And then we'll also deal with issues around the reporting entity, all right? So who is to report? Who is to report under this S1 and S2? Then there are also certain core content or core elements of the S1 and S2 that we need to be aware of as accountants. And remember, as professional accountants, where do we sit in all these things? That will also come through very, very significantly. So we play a role in all this journey, all right? We play a role in all this journey. And I'm sure our expert will also talk about the various guidance that the standard also gives. So in case you are looking for what other frameworks to use in order to fulfill the requirement of the S1 and S2, what other framework does the standard give you? What options does the standard give you? And where is this report located within your financial statement? So the location and the timing. Are you going to bring out this report after you have prepared your annual financial statement, or you need to bring out the sustainability report before your annual financial statement, or does the two of them go together in the same period? So in the same period that you are preparing your annual financial statement, do you also have to prepare your sustainability report? So we will deal with that issue. What about comparative information? So you are preparing the sustainability report for the very first time. Are you supposed to put in comparative information? That will also be dealt with. So a lot of things to deal with, and we'll also delve into some of the transitional release within the standard. So a lot to chew, a lot to meditate on, a lot to take away. So I'll encourage you that you stay focused, because in the next hour or so, we are going to bring you so much information that you will really enjoy this webinar. Please follow us and then get insight into all these things. And I'll be part of the panel discussion to discuss some of these technical areas and what Ghana is even doing in this S1 and S2. So very, very, very important. And one thing that you need to also take note of is this. This with S1 and S2, we have the non-accountants working with the accountants. So how does the two work together in order to come up with a sustainability report? So we will talk about that one too. How does the two work together to come up with a sustainability report? What is the role of the chartered accountant? What is the role of the other experts that comes on board when it comes to this ESG and sustainability trend? So without much ado, I want to hand over to the moderator who will then set the tone, set the background, and then put us all on board. So thank you very much and enjoy this webinar. Thank you. I hand over to you.
Na is a qualified lawyer with 12 years combined experience in environmental, social and market, legal research, strategy and consulting. Na's forte is providing strategic advice to companies and helping them embed sustainability ESG into their core business strategies. She is skilled at drafting ESG policies and guidelines, as well as designing and delivering trainings for staff, management, and board members of the firm's clients. Additionally, she guides companies to develop tools, systems, and processes for the effective implementation, monitoring, and reporting of their sustainability or ESG.
Hi, good morning, everyone, and welcome. We are back again. I told you we'll be back. We are back again. I told you we'll be back, and I don't mean that in a threatening way. As you have come to know, we are always happy and willing to share sustainability and ESG updates with you, given how increasingly important these matters have become. Today, I'm outnumbered by accountants, but thankfully, this is not a battle of professions, nor is it a turf war. All the professions have to come together and have this conversation because we all have a role to play in the success of the sustainability and ESG reporting, which ends with sustainability and ESG journeys, which ends with the reporting. To create context for today's discussions, I'd want us, particularly for the benefits of non-accountants on the call, I'd want us to look at a few terminologies. So when we hear IFRS, it means International Financial Reporting Standard, and they are responsible for setting standards for guiding the accounting profession and reporting. And one of its boards, which is the International Accounting Standards Board, the IASB, sets accounting standards. In November 2021 at the COP26, the IFRS Foundation announced that a board had been formed, the International Sustainability Standards Board, which is the ISSB. So when you hear ISSB, that's what it stands for, had been formed. And the aim of the board was to develop a comprehensive global baseline of sustainability disclosures for the capital markets. So for investors to have a sense of what's going on in the business beyond what they report or they put in their financial disclosures. And the IASB and the ISSB work together to ensure that financial accounting and sustainability disclosures align and do not run in opposite directions. Just to give a bit of history, which will make more sense as we delve into the main discussion on the table today. So you'd hear other terms like the SASB, which is a Sustainability Standards Board standard. So the Sustainability Standards Board was an existing framework, and they came together with the International Integrated Reporting Council, and they formed what was known as the Value Reporting Foundation. and the Value Reporting Foundation, the VRF, came together with the CDSB, which is the Climate Disclosure Standards Board, and were subsumed by the ISSB. And this bit of information is important because the purpose of the unification was essentially to consolidate staff and resources of the leading global sustainability disclosure initiatives to support the ISSB's work. And like we had mentioned previously, the whole idea was to create a global standard that essentially streamlined all reporting. And all of these various standards and frameworks and bodies that came together influenced what we are seeing today, the process and the outcome, which is the IFRS sustainability disclosure standards. And to directly quote from the IFRS website, SASB standards was a key starting point for the development of the IFRS sustainability disclosure standards. And whilst the integrated reporting framework provided connectivity between financial statements and sustainability related financial disclosures. And so after so many meetings, stakeholder consultations, and many other steps in between, the IFRS published the IFRS Sustainability Disclosure Standards, the S1 and S2, in June 2023. If you haven't had a chance to look at these standards we're referring to, the S1 speaks generally to general sustainability-related disclosures, and the S2 speaks to climate-related, is very specific to climate-related climate-related disclosures. Mark, we have brought Mark Hoffman, who is an experienced sustainability and integrated reporting expert from Deloitte, South Africa. Let's listen a bit to his profile, and then we'll bring Mark on to answer a few questions for us.
Mark is a sustainability expert and an assurance partner for Deloitte South Africa with over 32 years of working experience. Mark joined Deloitte in 2019 and has worked with over 200 organizations in implementing and improving their IFRS financial reporting and integrated ESG reporting processes and systems. He worked with more than 75 companies in IFRS accounting change, disclosure refresh, financial reporting control solutions, complex transaction support, including BBBEE structures, capital projects, restructuring, mergers and acquisition, and related financial reporting solutions. He believes in practical and purpose-driven reporting processes and systems that enable organizations to achieve their strategic objectives and purpose. Mark also leads the Deloitte Workiva Alliance in Africa, working with clients to automate their internal and external reporting, as well as reporting control management processes.
Thank you, Mark, for honoring our invitation to join us on our webinar today. So we have had a bit of ISSB, IFRS S1 and S2 history, and it sort of gives us some insight on what lies ahead. Anytime IFRS S1 and S2 come up, the two top questions people ask are, what is the effective date? And is it compulsory for all companies to comply?
Brilliant. Thanks, Na, and really great to be here and fantastic to see such a big turnout for this webinar. This is a really exciting time for the world and particularly for our profession in terms of getting to a global baseline of sustainability reporting. And your question is, first and foremost, the question most accountants will ask is, when do we have to do this? I suppose the simple answer is as soon as possible, because some of the sustainability issues we are dealing with are incredibly pressing and are certainly getting a lot of attention from investors, regulators, governments, and most importantly, business. But as far as S1 and S2 is concerned, early implementation is recommended or highly recommended by the ISSB, and these standards are ready for adoption from the 1st of January 2024. That doesn't mean that it's going to be mandatory adoption, and the mandatory side of these standards will come from local regulators. So Ghana has certainly indicated that your country will early adopt the S1 and S2 standards, but it'll be up to the regulator to determine what sort of transition and what sort of requirements will actually be behind these standards. So short answer, businesses should really get started with these standards sooner rather than later, but regulators will certainly, in different parts of the world, bring this on as regulation, either through your stock exchange, through your central bank, or typically through the Companies Act requirements of each country. No, you're on mute.
Somebody from the technical team must have muted me. Okay. Right. The idea behind the standards is for companies to report useful sustainability-related financial information. And they can achieve this by fairly representing all sustainability-related risks and opportunities that could be reasonably expected to affect their prospects. So the question here is there a one-size-fits-all approach?
Yeah, it's an excellent question. And what's taken so long in getting these standards to where they are today is that it was very clear a boilerplate approach and a standard approach to sustainability reporting would not work. Different businesses have different risks, opportunities relative to their business models, their strategies, and their sectors. And it was really important to build these standards so that they allowed businesses to focus on what is critically and really important to that business and their stakeholders in terms of their particular risks and opportunities. So what is critical for a power producer that is producing electricity in Ghana, or a gold mine that is involved in deep mining, or a consumer products company that is manufacturing and distributing products, is going to be very different. And therefore, the standards are centered around materiality. And this means businesses need to take a lot of time to really look and understand which of the risks and opportunities are most pertinent to them, and through the definition of materiality, to look at which of those risks are going to drive the future prospects and success of that business and, of course, its stakeholders. And to then center your reporting around what are typically going to be your most material risks and opportunities. That way, we're going to start seeing reports which are going to be shorter, more concise, and more impactful in terms of really dealing with the big ticket issues. And I think an important point to bring out is it's not just risks, but sustainability brings massive opportunities to business. And for businesses that are out there seeking capital in markets, seeking investors that are there for the long term, are certainly looking at the opportunity aspect of sustainability. And this is not just a risk-based approach to reporting. So I'll leave it at that, but I think in essence, definitely not boilerplate, and definitely gives the opportunity to businesses to really focus on what's important to them and their stakeholders.
I think that's quite an important point that you have raised. And I particularly like the emphasis on the opportunities, because when you're discussing with clients, there seem to be that focus on risks without seeing the silver lining in the cloud, which is the opportunities that could potentially come with all of these assessments and scenario analysis. So now that we've talked about materiality, doing the materiality assessments to get a sense of what is important to the specific company's needs, after you have done that, what are you, when it comes to the actual content of the disclosures, what sort of information would a company that wishes to comply with the S1 and S2, what kind of information would they ordinarily disclose in their report?
It's a great question, and again, I think the attraction of these standards is that the type of reporting you're going to see is very structured and very logical in terms of how it's set out. So typically, when and if you've had the time to look at the standards, you'll see, one, the structure of reporting is well aligned to global standards that we have seen and used in previous years. And there's typically 4 really important parts of the disclosures that you're going to be putting together. The first part is governance, and really looking at how your organization has structured its governance processes, structures, flows, and mandates to tackle and deal with the oversight of managing your sustainability risks and opportunities. So this could be down to the subcommittees that you may have put in place. We're seeing many sustainability committees featuring on boards, subcommittees, looking specifically at the terms of reference and the work plans that those committees or subcommittees have been tasked to oversee, and how that eventually rolls back up into the board's oversight of strategy and overall management of the business. The next part of the report is to deep dive into what are the big ticket risks and opportunities, as we just referred to in the previous question. And through applying this materiality lens, the business is able to identify which of the risks and opportunities are presenting the biggest challenges or opportunities to the organization in terms of the future prospects of that business. From there, and only then, do we then move into the strategy in response to these risks and opportunities, and to look at how a business is adapting its business model and its future strategy to deal with these risks and opportunities in a head-on manner. And not just short-term responses, but many of these strategies will deal with medium and long-term views to how to address these underlying issues. The final point, which is the most important point, is performance. And not just performance, but performance against targets. So having understood the risks and opportunities, the strategies to keep the business accountable and honest and focused, we then start looking at actual performance against targets that have been set in the short, medium, and long term. And this then allows investors to determine whether those strategies are firstly effective, and secondly, are being properly executed according to the targets that have been set for that particular organization. So those 4 pieces are really nicely logically sequenced. We don't just dive into performance reporting. We've got to understand the strategy before we look at the performance. We similarly don't just dive into strategy. We've got to understand what are the big issues that need to be solved in the sustainability space. And we'll touch on some examples a little bit later on.
Okay.
But I hope the point coming out, nicely structured, logically and connected reporting.
Yes, so we're looking at governance, we're looking at risk management, we're looking at strategy, and then we go on to performance management. I'm sorry, performance measuring of performance. And thank you for your concise response, but I have a follow-up question on governance, because from what you have said, the board plays a very key role, in driving all of this. So they need to be equipped to handle ESG and sustainability business. So based on your experience, do you find a lot of companies setting up specific subcommittees on ESG and sustainability, or do you find that existing subcommittees double as ESG and sustainability committee? Are you seeing a lot of businesses throwing all their might in making sure that they get it right at the governance level?
It's a really good question now, and we've certainly seen different approaches in different organizations. Typically, like you said, this needs to be owned by the board. And there are so many different aspects to sustainability that allocating it to one subcommittee is often quite difficult, because we've seen there's risk that needs to be looked after, there's strategy development, there's performance, and of course there's reporting. And of course, if you look at your normal suite of subcommittees, you would have a risk committee, an audit committee that looks after reporting and performance. In South Africa, you've got committees like social and ethics, which look after very specific mandates. So what we are seeing is that some boards are holding this mandate at the main board level and are actually dealing with it on the board agenda as cutting across all of those areas. Others are chunking it and giving the risk piece to the risk committee, the reporting and performance piece to the audit committee, and then typically either if they have a stratco or a strategy committee or a dedicated sustainability committee that then brings all of it together. It's probably going to depend on how complex your sustainability issues are as to whether you do need to form dedicated committees to look after it on a macro basis, or you're able to delegate it to the parts of the board that typically look after these disciplines, but very importantly, make sure it becomes integrated and doesn't devolve down into separate subcommittees, which is why many hold it at the main board level to make sure these parts are all dealt with in an integrated manner.
Okay. I'd want us to talk a bit more about integrated reporting and integrated thinking when it comes to sustainability reporting. But before we move on to that point, I'd want, do you see a similar theme when it comes to the expectations for or disclosure requirements? Do you see a similar theme running through the S2? I don't want us to focus too much on the S1, given that we're doing a general overview of both the S1 and the S2 on this webinar. Do you see a similar theme based on what you have just described for the disclosure requirements for S1? Do you see a similar theme running through the S2?
Yeah, absolutely. So S1 sets the structure that all of the thematic standards that follow will actually be true to. So that's governance, risk and opportunity, strategy and performance is what you'll see in all of the thematic standards. What we mean by thematic standards is sustainability topics will then have a standard dedicated to each of those. Climate is the first and happens to be S2, but we'll certainly see standards like human rights, pollution, water, human capital, which will all follow this very clear structure of the four components. But if you pick up S2, which I encourage people to do, it's not a long standard. It's certainly not IFRS 17 or 9. It's very, very focused on what you're going to be doing. Things like governance don't need to be repeated every time. If, for instance, like I said, you've got one committee that looks after all sustainability risks and opportunities, in S2, you don't need to repeat the information that you would have prepared for S1. But what these thematic standards do is they then tackle the topic head on. So with climate, your risks and opportunities would fall into your physical risks, the exposure that you have to the effects of climate change, be it drought, be it floods, be it temperature changes, be it rising sea levels that will affect your business. And of course, there's the transition risks that as the world now needs to move from fossil carbon fuels to more renewable energy, it's understanding what risks and opportunities that presents to your business. Then when we look at strategies, that will not be formulated. That's certainly up to your business in terms of how innovative and how you are going to tackle climate change, not only in the short term, but the medium and long term. But when it gets down to metrics, you'll see what the ISSB standards are set to do is they have what they call multi-sector metrics. So for climate, your GHG scope 1, 2, and 3 emissions, no matter what sector or industry you're in, you will be reporting that as your baseline impact from a carbon perspective. But then there's industry guidance. And what a power producer needs to report from a metrics perspective may be very different to what a mine or a consumer business or an agriculture business would typically be reporting on. So those metrics will always be set across all sectors, and then there'll always be specific industry guidance on metrics and performance management that would be expected for specific sectors. So very user-friendly, very specific, very close to what is being managed under that particular topic.
Yeah, thank you. I think we can say that this further buttresses the point that everybody's ESG journey or sustainability journey is different. So you can't borrow your neighbor's strategy or borrow your neighbor's process and think that it will apply to the very last letter to your process. And yes, I promised you that we're going to go back to integrated thinking and integrated reporting. So how does it fit in all of this?
So you talk about my passion now, which is integrated thinking, and when accountants save the world, I really do believe it will be through the integrated thinking. So those that are aware or understand where integrated thinking comes from, it comes from the integrated reporting framework, which happens to be a framework that is now owned by the International Sustainability Standards Board. And the intention is that integrated reporting and integrated thinking will continue as a framework and a set of principles that businesses can apply and are encouraged to apply alongside the ISSB S1 and S2 standards. But what integrated thinking does is it recognizes that many of the risks and opportunities that businesses are trying to solve cannot be solved in isolation. And typically what you will start seeing is that strategies being developed around these risks and opportunities are often integrated. And I always have my favorite example of the mining sector, and particularly in South Africa, but this holds true for many developing countries, which is challenged with the availability and the cost of electricity. But at the same time, as they export their metals, developed countries like the EU are demanding a lower carbon content to those metals. And if they don't meet those, there's often taxes or levies that are paid in exporting their metals. So in tackling these issues, when we start seeing some of the renewable energy strategies that mines are putting in place, costing multiple billions of dollars to invest in the renewable energy, either through solar or other renewable projects, they're actually solving not just one risk or opportunity, but multiple risks and opportunities. And through those renewable projects, they're starting to fix the cost of their electricity. They're making sure that there's continuity of supply, which is particularly challenging in countries like South Africa. They're significantly reducing the carbon content of the metals that they produce and export. But similarly, they're also creating opportunities for communities that become involved in building these renewable projects and maintaining them, in terms of sharing some of the electricity output with local communities around the mine, and of course, creating jobs off the secondary industries that come off these renewable projects. And finally, freeing up capacity in the electricity grid for other sectors that perhaps were constrained from a supply perspective. So we're often seeing multiple risks and opportunities being solved in integrated strategies. And of course, those outputs, which I call the 5 Cs, you can see where the performance metrics relative to that one strategy are now going to cut across cost, continuity, carbon, community impacts, and inputs. And that's where you'll start seeing your performance metrics being cut across in an integrated manner. So a very simple example, but a good way to explain integrated thinking.
And that thinking also reflects how everything is connected to each other. So everything in this journey, nothing happens in isolation. One way or the other, it has a potential impact on everything else. I think we've had quite a good conversation so far, and I hope participants now have a fair and general understanding of the basics. My question now is, how does the S1 and the S2 fit in with existing standards and frameworks? Is the alphabet soup getting tastier, or is it a case of too many cooks spoiling the broth?
That's a challenging question, Lar. And of course, we know ISSB and S1 and S2 was put together, was to form this global baseline. There are probably in excess of 80 sustainability frameworks that exist today and are used by multiple organizations. And the reason for the ISSB's formation was to bring this together as one global baseline of sustainability reporting. But as you know, we only have one thematic standard under S2, and typically it's generally recognized that there's 12 sustainability topics that need to be considered by organizations. So until the ISSB develop the full suite of standards, companies will still have to draw off other frameworks for topics that are not yet standards under the ISSB suite. The most ready go-to is the SASB standards. For those that don't know, that was the US standard setter for sustainability reporting. It's currently a set of standards that is owned by the ISSB and will be used as a proxy for the other, what I call 11 topics, until the full suite is available. Still reported under S1, but using each of these thematic standards as a proxy for what the ISSB will produce. In Africa, we've largely used GRI, that's the Global Reporting Initiative. GRI is very focused on stakeholder centricity and accountability. And while that can be used alongside S1, one has to recognize that there are different materiality applications. S1 is very often termed financial materiality, which I don't necessarily call because it goes beyond just financial. But if you start using standards like GRI, or most recently the EU, European Sustainability Reporting Standards, you've got to recognize that the materiality being used under these different standards and or frameworks eventually need to be aligned. And that's where you might find when you have to use different sets of standards, you may get to what's called the building blocks approach to reporting, where S1 focuses on investors and financial materiality. When you're using GRI, you may be building a stakeholder or double materiality lens to the reporting that you're putting out. And that might mean supplementary reports, or perhaps being very clear on what angles are being reported on. So to answer your question, we're not down to one set of standards just yet. By necessity, the ISSB standards will have to refer to other recognized standards and frameworks. But as that full suite is built, we should get to this concept of one set of global standards that solves for the consistency of reporting. The EU are developing their own standards under their Corporate Sustainability Reporting Directive. But the good news is there's been a huge amount of effort in terms of getting what they call interoperability between the ISSB standards and the EU IFRS standards, so that companies don't need to produce multiple reports for multiple jurisdictions. But here, as we always say, you may need to phone a friend in the form of your expert to make sure that you chart a course in your sustainability reporting that will meet perhaps the needs of multi-jurisdiction regulators, investors that operate across different jurisdictions, and to ensure that what your reporting is putting together will meet multiple users' requirements. Not easy to solve, but that's what the ISSB look to solve in the long term. Short question.
I was just about to ask if in-house accountants were ready for the task ahead, but you have taken the wind out of my sail by saying that they need to phone a friend when it comes to, because there are lots of moving parts. But the good thing is it is doable. It is doable, and it's shown by people like you who have been doing it for quite some time now. I think Kwabena, we are roping you in at this point. we want to know what the ICA, before we even ask Kwabena his question, I'm going to have to read this because I haven't been able to memorize that. So Kwabena is a member of the steering committee for the adoption of IFRS S1 and S2 in Ghana. And then he's also a member of the ACCA Global Roundtable on Sustainability and a board member of the IASB SME Implementation Group. He's actually in the UK now to attend a board meeting where they would be considering issues like sustainability and the IFRS S1 and S2, how they can make it, they can apply it to SMEs in a way that it doesn't become overwhelming for them or a daunting task for them. So yes, Kwabena, our question to you is, how is the ICA in Ghana responding to all of this?
All right, thank you very much. Now, I think, Mark, thanks. It's been very insightful. All the things you were sharing, very, very insightful. I hope both the accountants and non-accountants are really enjoying this. So the ICA issued a press statement in June, and the last paragraph of the press statement, I just want to quickly go through with you now so that people will see what the ICA has done so far. So the press statement, the last statement says this. It said the Institute has established a steering committee for the adoption of the standards. And it goes on to say that the composition includes the country's biggest accounting firms, the institute practice.
Kwabena, I'm going to have to interrupt you briefly, please. Can you please speak a little bit more loudly? The feedback is you're sounding quite faint.
Is it clear?
Yes.
Okay.
And please maintain the momentum.
Okay. Okay. So the institute, as I was saying, the press statement was issued in June by the institute, and the last paragraph says something, I think, which summarizes everything that the ICA is doing. So it said the institute has established a steering committee for the adoption of the standard. The composition includes the country's biggest accounting firms, the Institute's Practice Society, Bank of Ghana, Ghana Stock Exchange, and representative from the ICAJ Council. Their terms of reference include capacity building initiatives and assisting stakeholders to assess their own readiness for the adoption of the sustainability disclosure standard. In addition, the steering committee will have oversight of the adoption, promoting the vigorous application of the sustainability standard. And then what they also said was that views are welcome from the general public to make the work better. So the IC has gone forward to do that. And with the steering committee, there are 4 subcommittees that has been formed. We have the stakeholder engagement, which I happen to be part of, and I'm actually leading that stakeholder engagement subcommittee. There's also the communication, awareness, and advocacy subcommittee that has been formed. There is also the technical and research subcommittee that has also been formed. So clearly, the Institute of Chartered Accountants is really going all out to ensure that the vigorous application of the standard in Ghana is achieved. So what we are currently doing is coming up with a comprehensive roadmap. And this roadmap will spell out exactly the steps, the individual steps that companies need to take in order to be fully compliant. The Institute is also committed to ensure that when the effective date comes, which is 1st January 2024, companies are in a position to start the implementation. So far, that is what the institute have done. And as part of the committee, we have been having a lot of meetings, deliberating how the implementation will be seamless, effortless, things like that, so that everybody will come on board because of the benefits that the country stands to achieve. So now, thank you very much.
Yeah. So I at the beginning of your response, I was forming a follow-up question in my head, which is you answered at the end, because I wanted to know what we should expect in the coming month.
Yeah.
But and I have a comment. My comment is to the participants that the stakeholder engagement bit is very important. Otherwise, you'd have people making decisions that affect you, that have a potential impact on you without your input. So once you hear that the institute is open to receiving comments on the whole process, please make sure you participate. It's very important, especially if you
just to chip in. When you look at the terms and reference of the stakeholder engagement, as you said, that subcommittee is very important. All subcommittees are very important. But you look at the terms and reference of the stakeholder engagement, it says that is to identify, map, and segment stakeholders for onboarding. So you could clearly see that we want to carry everybody along.
Which is very important.
We want to carry everybody along the journey. So that is what, and also there is also the plans to also have a whole day of sustainability. That will be organized straight from the institute. So a lot of things are going on in that when it comes to S1 and S2. So there's more to come now. There is more to come.
Yes, and I really hope that participants on the call today will make that extra effort to involve themselves in the process, because once it is adopted, it will impact you and apply to you whether you want to or not. So get involved in the process, and by getting involved early too, it helps you familiarize yourself with what the requirements are, and then that way, by the time that is fully adopted, you will be somewhat ready for the journey ahead. And Kwabena, do you have, when it comes to what companies should or could do whilst they wait for the adoption, what do you think that, do you have any suggestions or recommendations on that front?
Yeah, thanks. So now there are three major challenges that, that comes with all these sustainability standards and ESG journey. One, we need to be thinking about the skill set. Are people ready? Do we have the required skill? So that is a huge hurdle we need to cross. Number two, we need to look at the data. Is the data ready available? Even if it's available, is it in a form that we can use? So you look at, again, I take you back to one of the subcommittees, which is the Technical and Research Subcommittee of the ICA. One of their terms of reference is to ensure that there is data integrity, because we don't want to get into the space of greenwashing. We don't want to get into the space of greenwashing because it's regulatory, it becomes mandatory. So then you get people, greenwashing when it comes to sustainability reporting. So we don't want to get into that. So data requirements, what is required? How do we pull the data together? Is the data available? Is it scattered all around? How do we do that? And then we should also be thinking about automation. Automation is the ultimate, because at the end of the day, you can't continue to do manual things. So these are very important hurdles that we need to cross. So you need to start now. That is why now we are even bringing to you this free webinar, just to start the discussion, start the conversation, talk to your consultant, or obviously talk to Deloitte, because you can clearly see that we are well positioned to advise you. So talk to Deloitte, because we can deliver the thing for you. Very important. These three hurdles must be crossed, and the implementation must start now. And I also love the thing that Mark said about governance. Is that the tones should start from the top. The subcommittee, either you have a whole subcommittee dealing with sustainability issues, or you spread the pieces around into the existing subcommittees within the board. So it must also start from the top. The tone must start from the top. And consult Deloitte. Very, very important.
Kwabena never misses an opportunity to do a little bit of marketing. But before we open the floor for questions, Mark, do you have anything to add on to what Kwabena has said? Especially regarding how companies can prepare for what's coming.
Thanks, Don, and thanks, Kwabena, and fully aligned with Kwabena's sentiments. And I think the really important message is to get started now. Many would ask, well, where do I start? And Kwabena set out a whole lot of things that need to be addressed eventually. My advice always to organizations embarking on this journey is start with those material risks and opportunities. And as a business, really get to grips with what's going to be fundamentally important to the future prospects of your business. Then to build that into really checking whether your business model and strategy is up to it, and where some of the innovation that many organizations are building around sustainability is required. And only then to start moving into how are we going to performance manage and report on what we are trying to manage. And the whole concept of reporting performance against a strategy, which is informed by risks and opportunities, brings purpose to reporting, as opposed to getting out there, producing 20, 30, 40, and in many cases, hundreds of metrics that simply have no meaning or purpose within the organization. And similarly for external stakeholders, when they read these reports, which don't come back to a strategy, there's very little insight and analysis that can come out of it. So always start with what is really important. Have you built strategies, policies, initiatives, and approaches that are going to solve and capitalize on these opportunities? And then use your performance to keep you accountable and to keep you focused on executing those strategies. And that really brings your sustainability reporting to life.
Yeah.
Okay.
Now,
Thank you.
Okay. Should I? Okay. Now go on. Sorry.
We want to give the participants an opportunity to ask questions. So we'll come back to you for additional remarks you may have. So the floor is open for questions. Please raise your hand if you have any questions.
No, there are some in the box.
I'm sorry, Mark. Kwabena, you were saying?
There are 2 questions in the Q&A box.
Yeah. In fact, 3 now. 3 questions.
Okay, so the first, we're going to take the first question. Are public sector institutions in Ghana required to comply with the standard? Kwabena?
So yes.
What's your plan for?
This is all part of the roadmap that the institute will bring, and we want to rope everyone in. So the stakeholder engagement subcommittee will do that. Everyone will be roped in, and no one will be left out. That is what I'm saying. No one will be left out eventually.
I think that sort of covers the second question, which is asking how government agencies like ECG and Ghana Water Company Limited will be carried along as stakeholders.
Yeah.
And
So
assisting.
Yeah, you know the public sector normally they use the IFRS, right? And the IFRS board is also doing a similar project as the ISSB has done. So they will be covered. They will be covered, and it will cover them. Yes.
Okay, there were a few questions which Anju has answered on how is the question essentially asking how other standards and the IFRS fits in with other existing standards and framework, and which Mark copiously addressed in his session. So I'm going to unmute, okay. Matthias, I'm unmuting you to ask your question. Okay, James, I'm going to need your help to unmuting Matthias because it appears. I'm unable to do it from my end.
Hi, now. So Matthias has been unmuted. I don't think he's online, so you can carry on. Because he's been unmuted.
Okay, okay. So we've answered all the questions that have been put in the chat box. There are no hands up.
Yeah, no. So now, as we are waiting for people to probably.
Yes, before you go on, somebody has asked whether will regulators in Ghana make it mandatory for reporting.
Yeah.
That's going to happen when once the ICA adopts the standards.
Adopted it. So
okay.
So that is happening.
So yes, so it's a matter of time.
Yeah,
It's
so
not,
ICA
yes.
has adopted it. So you should watch out for the roadmap. When the roadmap comes up, you should just follow religiously the activities in the roadmap, because it will then lead to the adoption. And then the other tail end of it, which I wanted to mention, is that there's also going to be an assurance bit of it, which will come at the tail end. So it's not that you produce something and it will not be audited. There is going to be an assurance side of this whole thing. And with that, they've actually issued an exposure draft on the assurance bit of it, which is the ISSB 5000. So it is coming. It is coming. It is coming. So they should just prepare now. Start preparing now. All right. Consult now. Consult.
and like, yes, okay, and there's another hand that is up. James, I'm going to need your help again. Richard Omari has his hand up. I'm trying to unmute, but I don't know what's happening from his end. So if you can kindly help with that. Before Richard comes on, hello, Richard. I don't know whether the problem is from my end or is from the participant's end. So let me unmute Raphael Amankwa. Raphael, please ask your question. Can you hear me? Hello? Can somebody else respond so that I know that you can hear me?
I think there are some technical challenges.
There are some technical challenges. Okay.
So hi now. So I think Raphael is not speaking. So maybe move on to something.
Okay.
Something you can proceed to talk now.
Yeah, thank you. Please, can you hear me?
Yes, we can hear you.
I can hear you.
Yeah. So thank you, Mark and Kobina, for the insights. So from your deliberations, S1 is generic, that's general disclosure. S2, I noticed it's more of climate related. Will there be other S, that is other standards going forward to cover the social aspects of the ESG? Because the S2 is covering more of climate related.
Expect more X's.
Yes, yes, and Mark mentioned in his in the response to one of the questions that we should expect about 11 more, if I'm not mistaken, 11 more standards that will speak to other different requirements of sustainability reporting.
Yeah, so now there is currently a discussion document that the ISSB have put out in terms of what they call their agenda, and they're calling for input. That input is still open until the end of September or early part of September, where they are actually asking stakeholders to determine what the priority next standards and engagements would be by the ISSB. To your point, there's been a very clear call for standards that deal with social issues, specifically addressing some of the developing countries' priorities where environmental may not always be the priority sustainability areas. So good news is the next standards that they have proposed do center around human capital, human rights, and are starting to get a lot closer to the social aspects of ESG. So quite reassuring. And yes, we would expect the European standards are sitting on 12 at the moment, 1 general and 11 thematic or topical. And I would guess that ISSB will land somewhere around those 12 standards. But of course, what gets prioritized is what they currently are engaging. So I would encourage you, if you have the inclination to get onto the ISSB site and perhaps participate in that stakeholder engagement and let everyone's voice, especially in Africa, be heard as to what the priorities are.
Okay, I hope that answers your question, Samson. There are 2 questions in the chat box. One is asking.
Thank you.
You're welcome, Samson. So yes, the recording will be available. It will go up on our YouTube channel. And there's a second question that I know Kwabena will be itching to answer, but I'm going to pass it to Mark. So one of the participants is asking how Deloitte can assist companies to comply with the disclosure requirements, and so that they can focus on other aspects of our business. Of their business. And
Mark,
I am handing over to Mark. I am doing this because I know how. And then when we give you the platform, we would finish at noon. So Mark, this comes to you, and then Kwabena can do a top up. And before Mark answers, I would want to say that whoever is asking this question, you can't leave your sustainability disclosures to somebody else and focus on other aspects of your business. It is part of your business. So having said that, Mark, how can Deloitte help?
Thanks, Na, and I can just imagine Kwabena is itching to add.
Yes.
But of course, our approach is always a value-add approach, and we don't want to get reports produced for the sake of reporting. We want those reports to matter, and I think now your sentiments would be that we need to convince you that these sustainability issues are key critical in your core strategy of your business. And the many organizations I've worked with, very seldom have I ever had the C-suite saying, let somebody else deal with this. This has always gotten back to the CEO, where she or he has acknowledged that these are mission critical issues that need to be dealt with. So how can we help is first and foremost to help you as an organization see which and what are the mission critical issues that need to be dealt with. And then in turn, look at how your business model and strategy may fundamentally change in response to where you need to track your business. And of course, off the back of really well-developed, well-thought-out strategies, to start then building out the reporting around those strategies and around the risks and opportunities that you're trying to manage, using what will be global standards to keep you honest on complete and insightful reporting using globally recognized and understood metrics that in turn will connect with your investors and will bring to you the long-term investors and value that any business out there today, whether you're in the public sector or the private sector, is desperately looking for. So my answer would be, if we don't convince you that these issues are what your board and your exco are going to be putting in their top 5 focus areas, we probably would have failed in the advice and the guidance that we bring to you. So quite controversial, but really bringing it home. And there's very few organizations we've dealt with which have ever concluded that this is a secondary objective. So let me hold it there now, and I'm sure, Kubena, you would love to add.
Mark, thank you. Mark, thank
Pablo,
you.
you have 30
Thank you for
seconds.
the professional answer. My answer is in twofold. Please, the number 05012. So call me. There's more I can share. But you see, we have a pool of experts like Na herself. The moderator you are hearing now, Na is an ESG strategist. So she has
And lawyer.
gone and a lawyer. So Na is equipped to handle some of, in fact, most of your sustainability issues for you. So the skill set is there. It's sitting with Deloitte. So I think I'll say just keep in touch. At the end of the webinar, we'll put our details there. Keep in touch. Let's start the discussion here. Thanks.
Okay, thank you, Kwabena. And another question in the chat box, how is this expected to impact mining firms as their activities have significant environmental impacts? I'm going to ask Mark to answer, and then I'm going to top it up from the Ghanaian perspective.
Yeah, thanks, Na. And mining's probably a sector I've worked with extensively over the last 12 years, and agreed, if there's any sector that has massive environmental, social, and governance aspects to it, mining is the case study. As I said, most of these standards, in fact, all of these standards, will have industry sector guidance. And I'm pleased to say mining will be one of the first sectors where there will be very specific guidance and, of course, expectations of the risks and opportunities and metrics that mines will be expected to report on. Having said that, mining and banking are probably the most advanced sectors when it comes to sustainability and ESG reporting. And I can certainly talk for the mining clients I work with that the lift to ISSB standards will not be as huge as it may be for some sectors that have not had to deal with ESG issues as front and center business challenges and opportunities as the mining sector. So probably more mature, but we can't talk for everybody.
Yeah, so in addition to what you have said, there's been existing law and regulations when it comes to the activities of mining companies that regulates their impacts on the environment. I think what these additional reporting requirements are doing is, instead of that isolated report that you'd file with the Environmental Protection Agency, they're asking that it should form part of your financial reporting, so that anybody who is looking at the numbers, the money, would also see these impacts in the same space, if not in the same document. So that is the major change that we're expecting to see with all of these standards coming up. So yeah, so that's it from the Ghanaian perspective. We are going to move on to the next question, which is on greenwashing. So I'm going to read directly because it's quite a long sentence. First of all, Emmanuel says, great session team. So you all get to applaud for yourself. And then the question is that it says, with respect to greenwashing and as it relates to consistency of the financial disclosures of companies with their climate strategy, especially for subsidiaries that are in Ghana and have group companies, I guess a subsidiary of a company that is probably based in either EU or in perhaps the UK. How is the ICA ensuring that regulatory commitment of the government is adhered to, especially for companies whose climate strategy are driven from abroad? So essentially, how are we aligning locally with what's happening in international jurisdictions? Which brings us back to how the ISSB standards fit into the EU corporate reporting requirements and other reporting requirements. They have sustainability related reporting requirements. Mark Kwabena, who wants to take this? Show by hand. Mark, do you want to take this?
So Mark, yeah.
I'm happy to open. So greenwashing has become a really big issue. And unfortunately, there are sectors and companies which have read the opportunities piece as opportunity to mislead. And that's unfortunate, which brings us back to governance has got a really important role to play in sustainability reporting. And it's so key critical to firstly, the reputation of your organization, that those that are found to have been greenwashing will quickly lose credibility with investors, customers, communities, and quite frankly, the media has been quite unforgiving. But of course, with any misbehavior, there's always a regulator. And in the US, we've seen some substantial fines being levied on financial services sector companies for greenwashing, which is tantamount to fraud.
Yeah, because I actually think that some certain countries have criminalized greenwashing.
Yeah.
So it's a criminal offense.
Yeah. So I would guess that as regulators mandate standards of reporting, greenwashing or misreporting would eventually, fall into the regulation that is developed. Assurance and auditing will have a role to play, but we all know that assurance and auditing is not first and foremost a compliance exercise. It's typically quality of reporting. But I do think auditing and assurance will go a long way to calling out and detecting unsubstantiated reporting in the form of greenwashing. On top of that, regulation's got a role to play. And I think we all know that stakeholders will quickly bring businesses to book where there is misbehavior in areas like greenwashing, and reputations can be destroyed where companies have been seen to be acting irregularly in this area. But really important topic, and certainly will need to be managed very carefully.
And in addition to what Mark has said, that in the last part of your question, you Emmanuel made reference to climate strategy being driven from outside Ghana. I think what we all need to recognize is the ICA is not in to dictate your strategy. The ICA is asking you to strategize and then report your strategy. So it's not going to focus on whether the strategy is coming from. It's not going to focus on whether the strategy is coming from your group office in Europe or whether it's coming from your local office in Ghana. The whole idea is you need to strategize and look at how all of these things have a potential to impact your business, and then also your business impacting all of these things. So that's by way of conclusion for Emmanuel's question. I've just been prompted that we are nearing the end of the session. So unfortunately, we can't take any more questions. I am going to give Mark 2 minutes to share with us some parting words. Kwabena gets 2 minutes, and then we take the closer. I will give the closer remarks, and then we can call it a morning.
Thanks, Na. I've said so much, so I will keep closing as short as possible. I think my clear sentiment is there's huge opportunity in sustainability reporting for businesses, both at the private and the public sector. And the opportunities that we are seeing, many of the businesses we work with managing and prioritizing very often far outweigh the risks. I don't want to undermine the real big risks that are going to need to be managed. But typically, coming back to one of the earlier questions, I'm quite convinced that when many of your businesses apply their minds to some of the key risks and opportunities that you're up against, this will become a mainstream board, an ExCo agenda item, and will certainly find its way into many of your core strategies. And in turn, your reporting will be built around what you're trying to achieve around sustainability. Final point, for developing countries, in Africa and around the world. This is a prime opportunity to raise capital, which is looking for destinations in sustainable businesses, in businesses that are becoming part of solutions to sustainable issues. And I think therein lies a huge opportunity in your reporting and in your participation in capital markets to go out and get started on these baseline global standards, and of course, use the opportunity that they bring.
Thank you, Mark. Kwabena, I just spotted one of your favorite things in the whole wide world in the chat box, so I'm taking us back there. Somebody's asking when you're going to organize a practical training or workshop on the application of S1 and S2.
They should expect it tomorrow.
Yeah, so on the back of that, can you share your parting words with us?
Mark has said a lot, but as much as we can see that there is a lot of workload that needs to start now, we should also take advantage of some of the transitional reliefs within the standard. So the standard has some transitional reliefs, and if you look at it, one of it is that when you are coming up with the report for the very first time, there is no need for you to provide comparatives. So that is one big relief. And then another relief is that when it comes to the timing of the reporting, what it says there is that you can produce the report, that is the sustainability report, after your annual financial statement has been done. So these are important reliefs that I think we should take advantage of and put our hands to the wheel. As Deloitte, we will bring you a lot of capacity building. We will try and hold your hands. We are also working closely with the Institute of Chartered Accountants. As I said, I'm part of the steering committee. So we are all out there to help and assist to ensure that come 1st January 2024, you are better pleased to start the implementation. Lastly, consult, consult, and consult. And who do you consult? Deloitte.
Yes, I agree with Kwabena. Consult, Deloitte. So thank you, Mark, for making the time to join our session and providing us with such insightful information and comments on the S1 and S2. Thank you, Kwabena, for joining us from the UK, even though you're based in Ghana, and sharing with us what the ICA is up to in terms of the adoption for their standards. We have posted in the chat box a link for participants to assess and then review the webinar. We would want to hear from you. We want to know how much of an impact we have made on you. And so please take time to complete this for us. And I want to say a huge thank you to all the participants for taking time off a whole 1.5 hours to join this very important conversation. And like we have said, it's a matter of time. So you should start thinking of how you are going to adopt all of these things that we have discussed in your operations to make it seamless for you when the time comes for you to report. And from where I sit and from what I have heard from today's conversation, the things that stick out are that it's collaborative work. It's not something that you can do in isolation. Even within the company, it's collaborative work amongst all the units, all the subcommittees, everybody on the board. And it requires some sort of ingenuity and expertise in ensuring that whatever it is that you're reporting, as Mark consistently and repeatedly said, that everybody's journey is different. And you should make sure that you're reporting things that are impactful, not just any information just because the information is available. So you need that level of ingenuity and expertise in determining what is relevant and what is useful. And also it's integrated. Everything is connected. So you cannot look at this in isolation. Thank you all for joining the webinar this morning. And like Kwabena said, you can always reach out to us if you have any questions or you need any help. Let's all go and have a wonderful and productive day. Thank you.
Thank you, Dal.
Bye-bye.
Bye. Bye, everyone.